Good day investors, and today we'll speak about three stocks to buy right now on June 2022. And the first stocks for today is Google. Google, its price is more than $2,000, but as we can see now it's on correction. Its correction from the high is now more than 20%, and its performance year to date is also about 20 below 20%. Let's check Google financials. So we see its total score is 99. It's near the maximum, and its financial stability, we can see that very low debt to EBITDA ratio. It's below 1, and very high, super high interest coverage. So its financial stability, its financial position is very strong. The profitability rank is also very high, maximum 10 from 10. Gross margin is 56, net margin is about 30%. It's a very profitable company, and the growth rank also have the highest mark, 10 from 10. 3-year revenue growth it 22, EBITDA growth for last 3 years it 34%. And now its value, as for me, its value, Google value, PE ratio is 20, and PS ratio is only below 6. So as we see, it's not very expensive now. As for me, it's fair value now of this stock. And here we can see the future forecast of Google. That revenue for future 3 years will grow. EBITDA, operational profit also will grow, and EBITDA, of course, will show a good, strong, and stable growth. And Google holds also a very significant amount of cash in the balance sheet. Now it's more than 100 billions, and there is no problem with that. It can easily pay all this debt by the cash. And let's move back to the chart for a minute. PE ratio, we can see that now it's 20, yeah, but it's also the same level that here in March 20. So it's the COVID crisis here. It's the where its ratio is very low as for now. And also I would like to pay your attention for the momentum. The RSI indicator now it's it's a weekly chart, so it's 38. Also it's the same level as the COVID here, the COVID crisis. So here is a good point to buy this stock right now. The next stock is Netflix. Let's have a look on it. On the chart we can see that about a few months ago it price were 600. Now it's only 200. So the correction from the high is more than 60%. Netflix is a top stock. It's one of the Fangman group. So as for me, we can see that it's even cheaper than Google. PE ratio 18, and PS price per share is less than 3, so it's not expensive at all. And also we can see here on the weekly chart, it's some kind the last 20 years, yeah, it was rising channels. So now we're here in the lowest border of this channel, and from here, of course, it could be it can be a good bounce from this point. Let's have a look on financials of Netflix. We can see that market cap current is 88 billions. Financial stability, so debt to EBITDA is very low, it's below 1. The company has very high interest coverage, it's more than 5, so any problems with that, it's a very profitable company. Its profitability rank is very high. Gross margin, we can see that above 40%, and net margin, and it is now 60%. For this sector, it's streaming video. It's as for me, it's very high and very good profitability. From here we can see that it's a growth company. Its revenue, EBITDA, and EPS, earning per share, last 3 years is show us a stable growth. And the forecast of analysts for this for Netflix for the future, for future 3 years, its revenue, EBITDA, and earning per share. Also, all these figures are expected to show a good growth in the future years. And the last stock for today, it's Intel. It's a chip maker. It's very cheap stock. We can see that PE ratio is less than 8, and price per share also very low. On the chart we can see that what we can see that it's a horizontal channel. Now we are trading on the lower border of this channel. So as for me, it's a good opportunity and good time to buy Intel stock. Also the RSI, the momentum indicator, we can see it's very low. It's a weekly chart, and of course if we move forward to the daily chart, also if there are signs that from here it may be a good bounce for the stock. Let's have a look on Intel financials. We can see that its market cap is about 200 billions. Its total score is very high, 89, and its financial stability. So let's see that very low debt to EBITDA ratio, interest coverage very high. No problem with that at all at Intel company. Also Altman Z score, it's more above 3, so the probability of bankruptcy is very low for this company. The profitability rank, it's very high margin of Intel. We can see gross margin 54%, net margin is 31. So Intel, as for now, is very high profitable company. Its gross rank also very high, 8 from 10, but of course it's not so high as Google, as Netflix, but we can see a positive dynamic. So its revenue and EBITDA for last years show us good signs of growth. And why actually I'm now buying Intel stock, just have a look on its value. Its total rank is maximum. Its P ratio only 7, PS ratio is 2, 3. In any case, the forward PE ratio 12, it's very cheap and it's very low. So for me, high, such margin, yes, and such cheap value, for me, of course, it's a good opportunity to buy. And also a nice bonus regarding Intel, this company is paying dividend. A dividend yield is more than 3%. Its payout ratio is only 23, so there is a good probability of increasing that Intel will increase its dividend. And also last 3 years dividend growth rate is 5%, so it's very nice to receive dividends from this company. So today we spoke about 3 stocks I'm heavily buying now. It's Google, Netflix, and Intel. All these stocks are high profitable, very cheap for now after correction. One of them, Intel, is paying dividend already. So for me, I think it's a good chance, good opportunity to buy these stocks now. And of course I'm waiting and I hope we can see a good bounce on the stocks in the future weeks. So if you like this video, subscribe on my channel, press the like button, and see you on the next time. Bye.